So the big tax question is this: how do wealthy people keep their money working for them when selling their business, real estate, or other highly appreciated assets without paying hundreds of thousands to millions of dollars in tax? What if we, as business and real estate owners who have poured blood, sweat, and tears to growing our wealth, and who didn't hire expensive tax attorneys and CPAs to map out an exit strategy, knew their secrets? Instead of recreating the wheel, why can't we just model the way they deferred 30 to 50% in tax, paid off debt, funded their next business dream, and most importantly, leave a financial legacy to give to the causes we believe in most? What if their secrets weren't complicated at all, and you just need a guide who is a few steps ahead of you? That is the question, and this podcast will give you the answers. My name is Brett Swarts, and welcome to Capital Gains Tax Solutions. Welcome to the Build to Billions podcast, where we guide successful entrepreneurs and investors on their journey from millions to billions. We believe the key to scaling and compounding your wealth and life starts every single day with the mindset and practice of stewardship over ownership and applying billionaire biblical principles. Our ultimate goal is to help you scale and compound your wealth and life so you can give more all the way to help MVPs. My name is Brett Swarts. Every episode, we feature some of the world's best entrepreneurs, millionaires, and billionaires, where they share their secrets and insights with us, so we can all level up and make a bigger impact. I'm excited about our next guest. In fact, he's a repeat guest. He is an amazing, successful real estate investor, author, and mentor focused on helping entrepreneurs achieve financial freedom and work-life balance. I could speak for this. I've read at least two of his books, and also implemented some strategies, which we'll talk about for building amazing, extraordinary families. But he is a partner at Southern Impression Homes, and he's been instrumental in building rental portfolios in Florida's high growth markets, specializing in build to rent properties with management services, which is really kind of unique for what they have to offer. And his experience includes over 2,000 rehabs and so much more. Please welcome to the show with me, Mr. Jim Sheils. Jim, how are you doing?
Hey, Brett, good to be here again. Thanks.
Excellent. For our listeners getting to know you for the first time, maybe give a little bit more about your story and your current focus.
Yeah, I started investing in real estate, back in 1999, so 26 years in, and it's definitely been a major focus of my life in going from near poverty to abundance. Real estate investing was the key. I started in bulk foreclosures, and about 10 years ago, made a switch into new construction, which is now known as build to rent, which wasn't even a term back when we really started. But that really accelerated my wealth. And in these last 10 years, I've also built a family education company to help entrepreneurs stay successful at home. So that keeps me busy, along with my wife, 5 children. I like to surf and travel. So it keeps me on the go.
Amazing. And by the way, you can learn more about Jim a couple different places, and he might just actually share where he wants to go. Jim, if people want to actually, jump in right now, where can they find you?
Yeah, if you want to go to southernimpressionhomes.com to learn more about our real estate investments, that's a great spot to see me. If you're looking for family stuff, just go to 18summers.com.
Perfect. And let's dive right into the topic at hand, which is the current build-to-rent market, or even the real estate market. We can get hyper focused on Florida itself. Jim, maybe go back. Where have we been the last 12, 24 months, in your opinion? And then, where are we kind of currently at? And then we can kind of future, semi-predict where you think things are going. But it'd be great for you to get your expertise on, especially Florida real estate market, which I think has had some mixed headwinds and some mixed places depending where you're at.
Absolutely. So when 3 years ago now, over 3 years ago now, mid 2022 is when we started to see a dip in a lot of major markets, especially the upper end markets in certain areas of Florida and such, when the interest rates started to just go up and up, which wasn't expected to the rate. So that definitely slowed things down, especially in the what I call the emotional markets, properties that are priced well below the median price for a home in the area. These are the popular ones that builders build with bigger spreads and more draw to them because they're so good looking and nice. And problem on the investment side, those do not cash flow and are emotional investments. You're betting on appreciation and monthly losses if you decide to rent it. And so those have definitely taken a bigger hit. What's very interesting now is, we saw certain areas, and then there was some hurricane things, but actually that was not what, we can talk about that, not what really drove up the insurance here, which I was educated on, did a whole webinar on with our insurance expert who's done thousands of policies for ourselves and our clients. But what we saw was, definitely a slowdown because of this. But what no one's talking about, the last 6 to 8 months especially, the media is always late to the party. And that's what I see. They're kind of always reporting what was a year prior because they're looking behind. We have seen a tremendous amount, Brett, and I'm saying thousands and thousands of new unit requests, because we're a builder, from some of the private institutions, public institutions, and family offices for us to build affordable housing in several markets in Florida. And we're not talking a few units, but thousands. And these people went on to they went onto the sidelines in 2022. And so they were silent for almost 3 years and now have come back and are taking, it's estimated they have, I forget how many, it was 90 something billion sitting on the sidelines for the build to rent strategy. And now that the interest rate sentiments are starting to go down, we're just seeing a ton of guys coming off, but there's a certain segment of the market they're focusing on and staying away from.
Okay, I think that's a lot of wisdom there. I want to kind of unpack a little bit here. Yeah, the emotional, I think you call it maybe the sexy, beautiful on the beach, just custom, like, you're just banking on the appreciation and maybe even just the certain markets. I know Miami just saw some extraordinary rapid hyper appreciation versus the cash flow fundamentals, right? So maybe walk through how your company helps investors delineate between those two and how you take a lot of the guesswork out, because you guys have done this so many times, and you say, hey, we've got these opportunities live right now, ready to go, and we can also build them, right? Some duplex, fourplex models, single family.
Yep.
Just kind of walk through how you help to de-risk the whole situation for those that, perhaps aren't professionals in this space, but really want to get that passive income going.
Yeah. So, the key word that I've been saying all of 2025 is affordability. Again, the luxury markets are really suffering. That has something to do with interest rates, though. Historically, interest rates are not that high. For the common theme of the last 10 years, they feel high, so it's keeping people on the sidelines. But it's those luxury markets that are hurting, and we try to stick affordable, Brett. That is, the A word is so important right now because there's a shortage. There was a stat that out of every 100 renters needing affordable housing, there's only 25 homes available. So when you hear about inventory levels, we are still extremely short on affordable housing. That's where someone, at the median or priced below the median can afford to rent a good home or buy a good home in the area. And so what we always encourage people is look for that if you're looking for more stability. And there's still areas, I think Florida, what we have to look at too, this is very interesting. You have to go where there's population growth. I mean, if you're going to build more houses, is there population growing? Everyone said to us, Florida's, and you'll see in the papers, the population is now going backwards. It's depleted. And that's great for clickbait and other things like that. But the stats show that Florida had a net population migration growth for the last year of 471,000. 471,000. So if that gives
By the way, pause on that for a second. Like how the drive-by media or whoever the clickbait, people that, it's just math, right, Jim? 471,000 net positive migration. But what is it about those that are out there that say everyone's fleeing Florida? Like I love Florida. I'm telling everyone to come here. I'm St. Augustine, right, and all these things. Like, what is that? Any way to figure that out, or is it just people just throw out misinformation for clicks?
I think that they're absolutely, like you said, Miami, areas where we built in Southwest Florida, you've seen a drop of a pretty substantial 22%. But remember, that also went up 45, 50%. So a lot of these people are still ahead. And I think that, you got to see where the information's coming from. A lot of times when it's clickbait, I notice people, I saw an article of someone doing this, of Florida's population growth is dead. It's not coming back. And they were from Ohio. And I like Ohio. There's nothing against Ohio. But Ohio has a net migration growth of 51,000. I'm saying, well, hold on. You're saying we're dead, and you're at 10% of where we are right now. And so I think sometimes there's competing data that is,
Hmm.
that might be kind of just claimed and not verified
Good.
to steer.
So you guys will focus on those places, obviously, that are growing inside of Florida. That's what you'll specialize in, and that have the affordability. Those two components. It sounds like that's the foundation to start. Is that a fair summary before we go into the next kind of piece?
Yes, absolutely.
So what's the next piece after that?
Well, again, where are I like to be the big fish. I mean, the little fish swimming next to the big fish, Brett. And what we're lucky is we work with over 1,000 individual investors, but we also work with the large institutions, and these guys have sharp pencils and do their homework. And so I like to
Mm-hmm.
go where they're building, and and I encourage people to invest alongside them, like the little fish feeding off the big fish. So that's
Mm-hmm.
super important, and they're still putting money into Florida. Now, if they were not putting money
Mm-hmm.
into Florida, then I would say, oh, that's a concern. And look, for 2.5 years they were not, and it wasn't really Florida; it was the interest rates. But I said,
Mm-hmm.
follow the big guys. Where are they going to? Are they still buying in certain areas? And look, there's lots of great pockets all over the U.S. I'm convinced of that. But I like to go where capital's already going. When you see capital going
Mm-hmm.
into an area, especially big capital like that, they've done some homework. And why not just cheat off their paper?
Pretty straightforward, right? I think about like the Costco that's built, and there's a pad out there, and if you put it in and out there, or you put a Chick-fil-A, like it's going to do amazing, right? And so so you might as well just be where the big fish are at, and that makes sense. So now maybe kind of get more precise in the model itself, Jim. Have prices come down? Have prices just kind of flatlined? What is your sense for your particular build to rent model, fourplex, duplex, single
Yeah.
family, and maybe give us a specific live deal to
So,
kind of bring this to life?
yeah, so like where we're doing a highest concentration of building right now is Central Florida. Ocala, greater area, towns around Ocala. That market has appreciated 3% over the last year, and rents are up about $50 to $100 on our average single family duplex. Now, if you want to get real numbers, we're selling single family homes there, new construction, 269,000, and for a duplex 395,000. So when you're talking about affordability, a lot of people are shocked to hear that we're still hitting those prices. And I say that's why we're still comfortable building. When you hear people saying, "Oh, we're not building," I say, "Well, what properties are you talking about that are sitting?" They're like, "Oh, well, they're 550,000." I said, "Well, that's more than double the price of the properties we're in." So those are real numbers there. I think another thing too, Brett, is always a good number to really throw out. So in Central Florida, where those single family and duplexes we're building, for example, full insurance coverage on these properties is very easy to obtain, and it's about $67 a month. Full coverage for a single family home. For a duplex, about $105. Now, from the news, if you looked, you said, "Oh, and you can't get insurance in Florida. Insurance companies are gone. You're screwed." The problem is, Brett, you got to look at the different types of properties. New construction is loved by insurance companies because it has to be built to a certain height on land now and to a certain structural design, compared to old houses built many years ago on low lying land to different structural design. And if you're within a mile of the beach and you have one of those houses, you are going to feel the brunt. Your insurance could be 10x what I just quoted. But that is the difference of deciphering which properties you invest in and which ones should you not.
Okay, excellent. So that's really helpful. So insurance is maybe, yeah, obviously it makes a huge difference, and that's why you want to get the real numbers and underwrite these things and in real time, like these deals. Okay, and so on average, if someone were to buy that duplex, let's say they just buy it cash for 400,000 to keep it simple, on average, Jim, net cash on cash return. What are they looking at after expenses in general for a deal in Ocala?
We're going to cash flow anywhere from about $300 to $750, and the cash on cash return will probably be about 8%. That's coming down now. And people say, "Well, how are you still able to get that for people?" Well, not only because it's affordable new construction, but also we offer our own financing. So as a builder with a large balance sheet, we're able to buy large tranches of money from mortgage companies, pass the savings along to our client investors. Where a lot of people are locking in, let's say it's 7% on a duplex right now, we're getting them locked in sometimes as low as 3.75%. And so that makes a huge difference. So, again, Central Florida, we're basically seeing, comparatively 2020 prices with 2021 interest rates. And that's the advantage of working with a new construction builder.
Love it. Okay, so 3.75% with the collective amount. Now, what and about 8% cash on cash, and is that like a 20% down, Jim?
20 to 25% down.
Okay, excellent, excellent. And then you guys talk about the property management, because I think this is a big piece too. Like having turnkey, all in, with you guys doing the building, you guys having the track record, you guys specializing in Florida, doing the research, but then the post close, one of the biggest things is property management. So talk about that and how you guys help to execute for investors.
Yeah, property management is definitely a key thing. When we started doing bulk foreclosures way back in 2009, that became apparent. People wanted properties that had good fundamentals, but they needed management, especially investing from far away. I'd say only 20% of our buyers live in the state of Florida. So management is a key part. My now partner, him and his father actually had a large management company. That's who managed my personal portfolio. And that's how we actually got started. But I encourage people, if you're going to buy a property, you got to have management. I remember my original mentor saying, you can get a house at 50 cents on the dollar. If you don't have management, you could lose money. And that always stuck with me. So one of the things we try to provide is management. That is the largest of our 140 person team. A large chunk of that comes from our property management division because it's just such an intensive part of the business. But in order to try to get the best cash flow and returns to start too, we actually offer an incentive program of 2 years free management. The first 2 years we waive the monthly management fee of 8%, so it doesn't even kick in until year 3.
I love that. By the way, if people want to learn more about Jim, you can check him out by going to southernimpressionhomes.com, right, Jim? Yes. Southernimpressionhomes.com. Right. He's also the author of a #1 Wall Street Journal bestselling book, The Family Board Meeting. I want you to touch on that, Jim, here in a second, which is an amazing way to, and also the co-founder of 18 Summers, which we'll talk about here in a second, which is incredible content to get the full wealth of family and mission, vision, and making an impact, which is really neat. I'm curious before we go there, Jim, just your outlook right now. Interest rates have been, at least the 25 bips, a little bit back here. What's your take on this whole interest rate world, and where you think we might be by the end of the year, and then how that might set us up for 2027?
Well, what I'm seeing
2026. I'm sorry, 2026 and 2027. Yeah.
No, I knew what you meant. Yeah. And so we're looking at 2 more interest rate drops from what they have basically said, the Fed has said. And it's interesting, Brett, although we've seen some downward movement a little bit in the interest rates, but not much. Just the sentiment that interest rate drops are about to occur and starting to occur, that we're now moving in that direction. We've seen the market pick up a lot just over last month. And so what I'm going to see is where there's inventory shortages, there's going to be strength. And when there's inventory oversupplies, there's going to be weakness. And so right now, again, people say, well, you keep saying the same thing over and over. I said, well, I'm giving you the big answer on the test, and that is affordable housing, workforce housing is in shortage, and it's needed. And we're going to see another inventory shortage in this sector of the market come by the end of the year. So we got flooded with a lot of this COVID inventory at the beginning of 2024, where we all had to wait for our supplies, get houses built and out. So we're going to see another inventory shortage, and that has normally put an upward pressure on rents and values. Now, I do think there's going to be weaknesses in other markets where they're higher priced and more emotional and negative cash flow, and those people are going to have to sell, probably a good deal lower than they're wanting to, or just stay put.
It makes sense. The fundamentals are there. I agree with you, Jim, too. Let's move into 18 Summers, and let's move into the Family Board Meeting. Walk us through that vision and how you're also helping entrepreneurs and investors, win at home as much as they're winning in real estate.
Yeah, I think that, there's lots of ways to figure out how to be a successful real estate investor, but not many ways to be a successful real estate investor at home, because we are quite ambitious, can be, very busy. And so we wrote this book out of a passion project for our own family. And it was not expected to become. If you told me in 10 years this is going to be a Wall Street Journal bestseller, I would have said, no, we're writing it more for impact and hopefully 10 people read it. But I think that what we created and cracked the code on is some simple rhythms that busy entrepreneurs and professionals can put into their life so they don't become a stranger at home, so they don't lose their family along the way. And that's such an important part, because unfortunately the work I've done in the last 10 years in real estate and working with families, you see that happen. And the good news is I don't think it has to happen. And we tried to, give a couple of clear ways to support that cause.
Yeah, and I've read both books, and they're amazing books. Jim, maybe just touch on maybe the top two most impactful ones that maybe are overlooked. That if the entrepreneur, the business owner, the investor are listening right now, and they have an opportunity to do it. So what would you say that the top two, maybe the most overlooked ones are?
Yeah, let's first and foremost schedule one-on-one time with the people closest to you, your spouse, each of your children. One-on-one time is just it's an unbelievable unfair advantage when you have scheduled one-on-one time. You separate the parts, you strengthen the whole. It's something that most kids will never experience. I know I didn't experience that with my father, and so there's such an opportunity there just to schedule one-on-one time with your spouse. I have a weekly date night with my wife. I have a day each quarter with each of my children one-on-one, and so that's actually absolutely key. I'd say the second thing, Brett, is the principle we talk about called intermittent tech fasting. We've all heard of intermittent fasting. It's from what I've read, and I'm not a health expert, but you're not giving up eating when you intermittent fast, but you're choosing to eat only between this time and this time, and it's got great things for muscle maintenance and repair and organ revitalization, all sorts of things. Same thing with intermittent tech fasting. You got to disconnect to reconnect. I've watched our phones and our laptops just run us all over. And what I've found is if we can take these little fasts, these breaks from the technology, we talk about in the book how to do it and the right times to do it. Again, it's an unfair advantage. You really put the magnifying glass on the relationship. The potency of the time together goes up. You stop seeming unavailable. And let me tell you, when I've worked with as many teens as I've had, when some of them have gone, off the line, they didn't feel like there was space to come to their parents. They seemed too busy. And a lot of the time that can be just a silly phone in between us. So, start practicing not only scheduling one-on-one time, but when you're having that one-on-one time and maybe an hour or two at the end of your day, don't be on call. Don't be available, and stop bragging that you're available 90 hours a week. That sounds great, but it could be very detrimental to your family.
Awesome. Jim Sheils, everybody. Jim Sheils. Check out a couple of different books. He has the Passive Income Playbook. He's got 18 Summers, and then he's got the Family Board, the board meeting, right? So those are the three, right, Jim? Did I catch them all?
That's it.
Yeah, excellent. That being said, Jim, you ready for the lightning round?
Sure, let's do it.
All right, knowing what you know now, if you go back to your 20-year-old self, what's the one gold nugget? Make sure you tell yourself to do.
In real estate, own less of better quality.
Excellent. Question number two, number one book you recommend or gifted most in the past year?
I reread The Alchemist with my son. That's always a good one.
Excellent. Question number three, top way you're using ChatGPT or other AI?
I like to use that for formulating some of my bigger deal proposals.
Excellent. Question number, I think, four. Number one, leadership quote or theme that you strive to live by?
Wow, that's a good question. Listen.
I love that answer. What are you most curious about right now?
AI is a curiosity of mine.
Me too. How do you best stay ultra healthy and super disciplined?
Well, I try to schedule gym time, and also my wife and I are health hackers together, so I have a good partner now.
Cool. Are you cold plunging and red lighting and all that cool stuff, or what do you mean by that?
I'm doing red lighting. I've done stem cells, exosomes, vitamin bags, some cold plunging for sure. Chiropractic. We have quite a regimen.
Love it. It's great. Yeah, yeah. Most people invest so much more into their business and other things, but they don't invest into their own health, right? It's like how much are you investing into your own body and your health? I think that's great. We got the Whoop bands. My wife got me on these going here, which
nice.
is pretty awesome too. Have you tried those yet, Jim?
I haven't. I've heard they're great though. I
Yeah.
no reason to try it.
I think you'd like it. Yeah, I really dig it. It's helped me to stay more consistent. Fantastic. Let's see here. What question haven't I asked you that you want to maybe tee up and answer?
The lightning round really hit it when people say, well, will build to rent work? And it said, yeah, of course it can work. Almost any real estate niche can work that's had, a proven track record to it. I just encourage people, really learn about a niche and go deep into it. If you try to get into 17 different real estate niches, it's a recipe for disaster.
And with that, I want to thank you for being on the show, Jim, sharing your wisdom, your insights with us. We'll have one last question and then just remind everyone where they can find you, which is this. It's our theme and our thesis of the podcast, which is to build to billions. So we give more all of it away by practicing a stewardship mindset over ownership. So how do you best practice that, Jim, in your day-to-day and in your life?
Stewardship. I'm active in a lot of family talks. And so, I'm always trying to impart our wisdom, and we're involved with a couple of different service projects. So.
Awesome. Great, Jim. And where can people best find you?
Again, real estate, southernimpressionhomes.com. You want to learn about family life, 18summers.com.
Perfect. Jim Sheils, everybody. I want to thank you for listening and watching everyone else on the podcast or the YouTube channels of the Build It to Billions podcast. We're also streaming on Capital Gains Tax Solutions podcast. We're on this mission with you to scale from millions to billions so we can give more all of it away to help MVPs. Please rate, review, subscribe, share this with someone to make an impact. And of course, if you're looking to start a build to rent opportunity investing, check out Jim and all of the links below on the show notes. Appreciate everybody, and we'll talk to you real soon. Bye now.
You have just listened to another information-packed episode of Capital Gains Tax Solutions with Brett Swarts. We hope you enjoyed today's show and found it helpful. Visit capitalgainstaxsolutions.com to access the show notes and to access more resources. Don't forget to leave a review and join us again next time.